For many years at least, the World Economic Forum has identified them as the most serious global risks in the next 2 years. U.S. politicians should focus on high gas prices, which undoubtedly intensify inflation. Still, they easily avoid discussing rents, which are more devastating to many people and which go up in many cities, leading to an intensification of evictions. But pretty much everything is getting more expensive. Purchasing power risk refers to the possibility that an investor's assets may lose value due to inflation or changes in monetary policy. This can result in reduced purchasing power over time. Inflation can cause the value of an investment to decrease over time, while fluctuating interest rates caused by monetary policy changes can also contribute to this risk. Additionally, credit risk can impact purchasing power risk, as unexpected defaults on securities can lead to significant losses. It is crucial for investors to understand the potential impact of inflation, interest rates, monetary policy, and credit events on their long-term investment goals and objectives. Federal Reserve Chair Jerome Powell and Senator Elizabeth Warren went head-to-head Tuesday over the Fed's plan to slow the labor market in an effort to curb inflation. Putting 2 million people out of work just part of the cost, and they just have to bear it? If data continues to point to a solid economy and persistently rising inflation, Federal Reserve Chair Jerome Powell told a Senate panel Tuesday that the Fed might increase the amount of its interest rate rises and boost borrowing costs to higher levels than previously predicted. The most recent economic statistics have come in better than projected, implying that the eventual level of interest rates is likely to be higher than previously anticipated, Powell told the Senate Banking Committee. If the totality of the evidence suggests that greater tightening is necessary, we would be willing to accelerate rate rises. Powell said that, thus far, the majority of the slowdown in inflation is due to the unwinding of supply chains, which has allowed more furniture, clothing, semiconductors, and other tangible items to reach the U.S. shores. In contrast, inflationary pressures persist in many parts of the economy's enormous service sector. Renting and housing expenses, for example, continue to be major sources of inflation. At the same time, the cost of a new apartment lease is increasing considerably more slowly, a pattern that, according to Powell, should lower housing inflation by mid-year. Nonetheless, costs for numerous services, from dining out to hotel rooms to haircuts, continue to rise swiftly, with little evidence that the Fed's rate increases are having an impact. According to Fed officials, the expenses of such services are mostly due to growing wages and salaries, which businesses frequently pass on to their consumers in the form of higher pricing. After discussing various aspects of inflation, including its impact on purchasing power and the different types of inflation such as cost push and demand pull, we recommend individuals and businesses to educate themselves on inflation risk and the role of the Federal Reserve in controlling it. It is also important to consider credit rating, hyperinflation, and commodity purchasing power risk when making financial decisions. Understanding the risks associated with investments, systematic risks, and bonds is also crucial in mitigating potential losses. For countries experiencing high levels of inflation, being aware of purchasing power risk is essential to protecting their economy. By understanding key points about inflation and purchasing power, individuals and businesses can make informed decisions and minimize potential risks.